Welcome back to LexTalks, Legal Topics Simplified, where we try to make sense of all the complexities of the Indian legal system.
Right, yeah.
Just break it down into bite-sized pieces.
Yeah.
So today we are diving deep into something that affects all of us.
Okay.
Something that's, I think, close to everyone's hearts, and that is the insurance of bank deposits.
Oh, right.
So, this is a system that's designed to protect our hard-earned money
Yeah.
in case, something happens to our bank,
Okay.
which, touch wood, hopefully never happens.
Hopefully not.
But it's good to be prepared.
Right, absolutely. You got to be prepared.
And you might actually be surprised to know that India was actually a pioneer in Asia when it comes to deposit insurance.
Oh, really?
Yeah, we started this whole thing way back in 1962.
Wow, that's interesting.
So even before, a lot of developed nations had, similar safeguards in place.
Heidegger.
We were already thinking about this, so we have our expert here with us today to kind of break it all down, unpack it all.
Absolutely.
And, let's get into it.
Let's do it.
So I guess, starting with that point that India was a pioneer,
Right.
it's kind of amazing that we were so forward-thinking.
Yeah, we really were ahead of the curve on this one. It's fascinating how this system kind of came into being, especially considering, there were those bank failures back in 1960.
Oh, right.
The Laxmi Bank and the Palai Central Bank, they kind of went under. And these events, they really highlighted the need for this sort of safety net. And that's kind of what led to the creation of the, initially the Deposit Insurance Corporation, DIC, back in 1961.
Wow. So it was really like a wake-up call, huh?
Definitely a wake-up call.
Sometimes it takes, a little bit of a shake-up for real change to happen.
Exactly.
That's how it often is.
That's how it goes sometimes.
So DIC was kind of the precursor to what we now know as the DICGC, right?
Exactly.
The Deposit Insurance and Credit Guarantee Corporation.
Yeah.
Which, if I understand correctly, is like a subsidiary of the Reserve Bank of India.
That's absolutely right.
Yeah.
And, it's really, it's not just a historical thing. It's really interesting because this whole evolution shows how India really understood how important it was to protect depositors.
Yeah.
Really early on, I mean, you pointed it out, DICGC under the RBI, it's like at the core of this whole deposit insurance system in India.
Yeah, they're like the big guardians of our money.
Yeah, exactly.
The money guardians.
Guardians of the money.
So let's talk about what this means for us, everyday folks.
Sure.
What is deposit insurance, like in simple terms?
Okay, yeah.
Is it like an insurance policy for my money?
You got it. That's a great way to put it.
Okay.
Yeah, so it's basically a financial guarantee. For the money you've deposited, it's basically a promise that you'll get your money back, reimbursed up to a certain amount.
Up to a limit.
Up to a limit, yeah, if for whatever reason the bank just can't return your money.
Can't return it.
Now, is it exactly like your, car insurance or health insurance?
Right.
Not quite.
Not quite, yeah.
But what's really nice about deposit insurance is that you actually don't pay a separate premium for it.
Oh, okay.
It's the banks that take care of that.
Okay, so I don't have to pay anything extra?
Yeah, you don't have to worry about that.
That's a relief.
All built in.
But if the banks are paying for it, does that mean that, ultimately that cost gets passed on to us somehow?
That's a great question.
Like higher fees or something?
Thankfully, no, they can't really do that.
Okay.
Banks, they basically absorb this cost of the premiums, and they can't directly pass it on to you.
Okay.
So the current rate is, it's really a tiny fraction of your deposit of 12 pays.
12 pays.
For every 100 rupees.
Okay, 12 pays. I don't even know what to compare that to.
It's tiny.
It's like less than a pinch of salt, probably.
Yes, it's really small.
But yeah, I mean, that's amazing.
It is.
That it's just built in. I don't have to do anything. I don't have to sign up. I don't have to pay extra.
Yeah, it's there for you.
That's a real peace of mind.
It is. It's peace of mind.
So, how much am I actually covered for? Like, what's the limit if, let's say the worst happens and my bank goes, belly up.
Let's hope that doesn't happen.
Yeah, fingers crossed, but you gotta be prepared.
You gotta be prepared. That's right. So right now the limit is 5 lakh rupees.
Okay.
Per depositor per bank.
Per depositor per bank.
So that covers both the principal and the interest.
Okay.
And, this isn't just a random number.
Yeah.
They really, it's designed to fully protect a vast majority of deposit accounts. And actually in March of 2021, a full 98.1% of accounts were fully covered by this,
Wow.
which is way above the international benchmark,
Okay.
which is 80%.
So we're really doing well.
Yeah, we're exceeding it by quite a bit.
98.1%. So basically, I mean, most people are completely covered.
Most people are fully covered, that's right.
But what about those, folks with more than 5 lakhs in their account?
Right.
What happens to them?
Well, that's where things get a little tricky, right?
Yeah.
It's a great point you raise. I mean, for people with larger sums, they need to kind of be aware of this limit
Mm-hmm.
and
Right.
maybe consider diversifying,
Okay.
putting their money in different banks.
Different baskets.
Different baskets, exactly.
Yeah.
But there's also a lot of talk about increasing this limit, especially for, senior citizens.
Yeah, they rely on that money.
They really rely on their savings.
Yeah, that makes sense.
So there's a lot of talk about that.
Okay, so we know there's a limit, but are all types of accounts covered?
Yeah, that's a good question.
Like what about, my savings account, my fixed deposit?
Okay.
That recurring deposit I have for my vacation fund,
Right.
are all those protected?
Yeah, that's the good news. Pretty much all the usual suspects are covered.
Okay.
So savings, fixed, recurring, even current accounts.
Even current accounts.
And yes, joint accounts as well.
Okay, joint accounts too.
Each holder is insured up to that 5 lakh limit.
Okay, so it's really meant to be comprehensive.
It is. It really is designed to offer broad protection.
Yeah.
It really is. But, like any system, there are always a few exceptions.
Okay, like what are we not talking about here?
So, for instance, deposits made by foreign governments, those aren't covered.
Oh, okay, so that's like, I guess that falls under a whole different
Yeah, different ballgame.
international diplomacy kind of thing.
Exactly. Not really the DICGC's problem, yeah.
Right.
Another one is interbank deposits.
That's your bank.
Yeah, so that's like the money that banks keep with each other.
Oh,
Okay, so that's treated a bit differently.
So it's not like my money. It's like
It's not your personal savings, right?
right.
Yeah.
It's the bank's money.
Exactly. Yeah. And then, obviously any deposits held outside of India,
Right.
those aren't covered either.
Makes sense.
This is really focused on the Indian banking system.
Right.
Okay.
So essentially it's all about protecting individuals and small businesses.
Yeah.
Not the banks themselves or
Not the institutions.
foreign entities, right?
Exactly.
Okay.
And then there's one more.
Okay.
Deposits made by the central and state governments, those are also excluded.
Okay, well I guess the government's got their own
They got their own thing going on.
their own ways of managing those funds.
Exactly.
All right, so we've talked about who and what is covered,
Right.
but how does this whole system actually work, in practice? Like
Yeah.
what happens if a bank actually fails?
Like, walk me through that scenario.
Let's say, worst case scenario, a bank is in trouble.
Yeah.
They've tried everything and it's just, heading for collapse.
Oh.
This is where the DICGC steps in.
Okay.
So once a bank is declared as failed,
Mm-hmm.
the DICGC swings into action,
Okay.
and they basically have 90 days
90 days.
to reimburse the insured deposits
To the people.
to people who lost their money. Yeah,
Okay. 90, that sounds relatively reasonable.
it's a good time frame.
Yeah.
But is it always that smooth? I mean, I imagine things can get pretty chaotic.
Yeah, people are panicking.
Absolutely. When a bank goes under,
Yeah.
are there ever like delays?
Yeah, like do people actually get their money on time?
Yeah, that's the big question, right? And you're right, it's a very stressful situation.
Yeah.
And even though there's that 90-day target, sometimes there can be delays.
Okay.
Just because of procedural things. Bureaucracy, exactly, a lot of paperwork.
Paperwork.
But the good news is that, the DICGC is always trying to, improve.
Yeah.
Improve the system, make it better.
Make it more efficient?
Yeah, more efficient. And they've actually implemented, some recent amendments to the DICGC Act
Okay.
to try and make the process as efficient as possible.
Oh, well, that's good to hear.
Yeah, they're working on it.
That they're always trying to improve things.
Always trying to improve things.
So, speaking of those amendments, I understand that there were some pretty big changes introduced in the 2021 Amendment Act,
Yeah.
especially regarding something called interim payments.
Right.
What's that all about?
So this is actually it's a really important change
Okay.
because it really addresses a big pain point.
Okay.
So imagine a situation, where a bank is having difficulties
Mm-hmm.
and the RBI, to prevent a total collapse,
Yeah.
they have to step
We got to
in.
do something.
They have to do something, and they impose what's called a moratorium.
A moratorium. Now that's a scary word.
Yeah, it's not a good word.
It basically means like you can't get your money, right?
Yeah, basically you can't access your own funds.
Oh, that's a nightmare.
It's a nightmare for depositors. You're absolutely right.
And that's where these interim payments come in.
Exactly.
Okay.
So the 2021 amendment makes sure that even when a bank is under these kinds of restrictions,
Mm-hmm.
depositors aren't just left, high and dry.
Right.
They can actually get what are called interim payments
Okay.
up to the insured amount.
Okay.
And here's the key. These payments have to be made within 90 days.
So even if everything's frozen,
Even if everything's frozen.
you can still get at least some of your money within 90 days.
Exactly. So it's like a safety net.
Yeah, safety net within a safety net.
Absolutely. Yeah, that's a great way to put it.
That's a huge relief.
It is.
Knowing that.
Yeah, it really shows how, the DICGC is really becoming more responsive
Yeah.
to the needs of depositors.
To the needs of the people.
Yeah, during these times of crisis.
Okay, so, it's clear that deposit insurance plays a really important role.
A vital role.
Yeah, in our financial system.
Absolutely.
But let's be honest, I think most people, they don't really think about it that much.
You're right.
Bank failures, thankfully, are pretty rare.
Yeah, touch wood.
Touch wood, yeah.
Hopefully they stay that way.
Hopefully, so why should I really care about deposit insurance
That's a fair point.
if it's unlikely that I'm ever going to actually need to use it?
That's a great question, but the importance of it really goes beyond just that worst case scenario.
Okay.
It's really about building trust
Okay.
and confidence in the banking system as a whole.
Okay, I like that. How does it do that?
So think about it.
Yeah.
When people know their money is protected, they're more likely to actually use banks,
Okay.
right? They're more likely to participate in the formal financial system,
Yeah.
which leads to, more financial inclusion,
And financial inclusion.
which benefits everybody.
So it's not just about protecting individuals, it's about
It's about the health of the system.
a whole system.
The whole system, exactly.
Yeah, that makes a lot of sense.
Yeah.
But let's play devil's advocate for a second.
Okay.
Are there any downsides
Sure.
or potential challenges to this system that we should be aware of?
Of course, no system is perfect. Yeah, absolutely. You're right. So one of the big ones is, that 5 lakh rupee limit.
Right.
Yeah.
That's kind of what I was thinking too. Like,
It's a decent amount,
yeah.
but for someone who has 20 lakhs in savings,
Right.
if their bank fails, it's not going to cover everything.
That's a good point. So I guess for those high net worth individuals, it's even more important to kind of spread their money around,
Absolutely.
use different banks, maybe explore other investment options.
Diversification, yeah,
Yeah.
that's key for those folks.
Okay, and then what about for the banks themselves? Like you said, they can't directly charge us for this
Right.
this premium.
Yeah.
But does that cost still affect them somehow?
Well, yeah, ultimately these costs, they can impact their profitability,
Okay.
right? So even though they can't directly sort of pass it on to you,
Yeah.
it could trickle down in other ways.
Okay, so it's a bit of a balancing act,
It is.
right? You want enough coverage
Mhm.
to keep people confident,
Right.
but not so much that it really strains the banks.
You got to find that sweet spot.
Yeah, find that sweet spot. Okay. What about those delays that we were talking about before?
Right.
Even with that 90-day rule,
Yeah.
things can still, get bogged down, right?
They can, yeah.
Like, especially with all the paperwork and everything.
Exactly. Even with the best intentions,
Yeah.
sometimes just procedural issues can cause delays,
Okay.
which is really frustrating for people who are already, dealing with this stressful situation
Oh, I can imagine. Yeah, waiting for your money when you need it.
when you need it the most.
Yeah, that's gotta be tough.
Yeah, it's not a good situation.
Are there any other, I guess, concerns about the system?
Well, there's also this concept of what's called moral hazard.
Moral hazard.
Yeah, so it's basically the idea that if banks know that deposits are insured,
Mm-hmm.
there's a risk that they might start taking on, more risky ventures.
Oh, okay.
Right, because they know that the DICGC will be there
To back them up?
to back them up, exactly, to cover at least some of the losses.
So it's kind of like that safety net could lead to some reckless behavior
It could. Yeah, that's the risk.
if we're not careful.
Absolutely.
So we need someone to kind of,
Keep an eye on
keep
things.
an eye on things, keep everyone on a
Oversight, yeah,
yeah.
absolutely. And the RBI plays a big role in that,
Okay.
making sure that banks are playing by the rules
Yeah.
and managing risk responsibly.
All right. So speaking of rules and kind of oversight and all that,
Sure.
how does India's deposit insurance system compare to other countries?
Yeah, that's a good question.
Like, are we doing a good job, or are we, kind of lagging behind?
Right. It's always interesting to compare,
Yeah.
how different countries are tackling this.
Yeah.
So in the U.S., for example, they have a much higher limit,
Okay.
$250,000,
$250,000. That's like,
which is, well over 2 crore rupees.
wow, that's a big difference.
Yeah, it's a big difference.
Okay, what about other countries? Is that typical, or is the U.S. kind of an outlier?
Well, the UK is somewhere in between. They offer coverage up to £85,000,
Okay.
which is closer to, I think, 90 lakhs or so.
All right, so India's 5 lakhs is definitely on the lower end then.
It is, yeah, globally speaking.
Okay.
But, remember, it's a big jump from the previous limit,
Right, which was 1 lakh.
which was only 1 lakh.
Yeah.
And, there's all this talk about raising it,
Yeah, especially for those seniors.
especially for seniors, exactly.
It's good to know that they're always evaluating it.
We're always looking at it.
Yeah, trying to
They
improve.
make it better.
So, what else is kind of on the horizon for deposit insurance in India?
Yeah, so there are some interesting things being discussed.
Yep.
One really interesting proposal
Yeah.
is to actually change how those premiums are paid.
Okay.
So right now it's based on the total deposits a bank holds,
Yeah.
but the idea is to link it to the insured amount.
Oh, so instead of like all the money,
Well, the money.
it's just the money that's actually insured.
Exactly.
Okay. Yeah, I could see how that would make things a little bit
A little bit fairer.
fairer. Yeah.
And maybe even free up some resources for the banks.
Okay. Okay. Well, this has been a really eye-opening conversation.
Yeah, it's a fascinating topic.
I feel like I actually understand how this whole deposit insurance thing works now,
I'm glad to hear that.
and more importantly, like why it matters.
Yeah, it's important stuff.
So what are your kind of key takeaways for our listeners today?
So I think the big takeaway is that deposit insurance, it's one of those things you might not think about very often
Right?
until you really need it.
Until you need it.
But it's a really crucial part of our financial system.
Yeah.
It's protecting your money.
Protecting our hard-earned money.
Exactly. Your hard-earned savings, and it promotes confidence in banks.
Right.
So really understanding how it works.
Yeah.
It gives you the power to make, better financial decisions.
Yeah. Informed decisions.
Informed decisions, exactly.
Yeah. Couldn't have said it better myself. It's like anything else, right?
Yeah,
The more informed you are,
absolutely.
the better choices you can make.
The better choices you can make. Yeah.
And remember, folks, this is just the starting point.
Yeah, it's a jumping off point.
If you have any questions, any concerns,
Don't hesitate to reach out.
yeah, reach out to your bank, to the DICGC.
Yeah, they're there to help.
They're there to help. All right. Well, this has been a fantastic deep dive
Yeah, it has.
into deposit insurance.
It's been a pleasure.
Big thanks to our expert for breaking it all down for us.
My pleasure. Happy to be here.
And to all our listeners out there, thanks for joining us today.
Yeah, thanks for listening.
Don't forget to subscribe to LexTalks
Yes, subscribe.
for more fascinating insights into the world of Indian law simplified.
We'll be back with more.
We'll see you next time.